Okay, so if it's so we what we did already is something called net method, right? And as I said, it's you're assuming your customer is going to take the discount, but the customer never took the discount. So now that's why you have this new account, credit account, and that showed up as $10,000. It'll be part of income statement, right? So now the other method is the gross method. Okay, so let's do that one. And the gross method, according to gross method, we will assume something else. We will assume that the customer does not take the discount, okay, in the beginning. So same entry, January 2nd, we'll do the same entry on January 2nd, assuming they don't do it. So then your accounts receivable is going to be a bigger amount, 610,000, because your sales revenue is going to be assumed to be 610,000, right? Because you're assuming that your customer will pay you higher. So now you have a high revenue in the beginning, and then the other part of the sales journal entry that we always have to do is take care of the cost, right? So cost is always inventory is credit, as I did that before, which was 500,000. So this is just a repeat, and then cost of goods sold is 500,000. That's an expense. So once we did that entry, so the point is, what happens right after? When you get that payment on January 28th, I believe, right? That's what we had. Yeah, January 28th. That when you receive this cash that you received earlier too under the net method, your cash was 610. So same thing here. Cash will be 610 debit. But then your accounts receivable will be credited by exactly same amount, because you assumed your customer will not take care of the discount. So now, so now we don't have to do the sales discount forfeited account in this case, because you were not assuming in the beginning that your customer is going to take the discount, right? So we don't have to do that. And but then this is all based on different methods you use, right? But what happens if things don't think the way we assume under the gross method? So let's say the customer is very good. I don't know what happened to here, but I'm gonna fix this still. So the customer is taking a discount, right? So under the gross method. So now we are going to get 600,000 in that case, right? If the customer pays within 5 days, we know we're gonna get 600,000. But under the gross method, we assume the customer is going to pay us 610,000, right? So in that case, our cash will be 600,000. Our accounts receivable is going to be 610,000, because we assumed the customer is not gonna get, and generally don't take the discounts. And then this extra thing is this, there's this debit missing, right? 10,000 debit missing. So that debit is something called sales discount. Okay, so we have this 10,000 here. This will show up as part of the income statement, and so it's it impacts the sales account. So here we do take care of things that don't happen according to the assumption under gross method. But if I go back into the net method, we assume that the customer is going to take the discount, but the customer never took the discount, and that's why on January 28th, never, they make the payment, an extra 10,000 payment. But let's say, assume that they make the payment within 5 days, right? They take care of that discount. So if you take care of that discount, then the entry will be the simple journal entry, right? Because your cash, I'm gonna write this here. I'm assuming that the customer paid within 5 days, the way we assumed according to the net method, right? So cash is going to be exactly 600,000, and your accounts receivable is going to be 600,000. So that's when you assume that, when you think that the world is exactly you assumed, then we don't have to add on these additional account. But when it differs, we have to add this account called sales discount forfeited, or under the net method, or say gross under the gross method, we have to introduce sales discount when the customer unexpectedly takes a